So good morning, everybody. Good afternoon, depending on where in the world you are. My name is Martin Naor, and I'm the founder of BankTech. We focus on enabling the financial ecosystem to work on financial health and inclusion for all. We believe strongly that financial inclusion is one of the ways, one of the key ways, actually, the world has to improve. And we think that that is only achieved through working with the ecosystem, with the existing players, with new players, with everybody that wants to help. So that's what we do. We do it through providing the digital tools financial institutions need to serve their customers. Obviously, that has been one of the key topics during this pandemic, where mobility was reduced, and there has been a lot of conversation on how that's going to evolve, and that is a little bit of what we want to talk about today. In terms of the starting point, from the numbers from McKinsey, but pretty much every consultancy has kind of the same numbers, both in Africa and Latin America, which are two of the key regions where we focus on. Return on equity for the financial institutions was among the highest in the world. And that is forecasted to go down, both because of the pandemic and a general crisis in those markets, the GDP is going down for 1 or 2 years before we start the recovery, but also because of the entrance of new players and increased competition. We actually believe that does not need to happen, not necessarily at least, because as much as there are challenges, there are a lot of opportunities, and even more in markets, in emerging markets like Africa in general. And there is still a lot of financial inclusion to be done, a lot of customers to bring on board, and also there is a lot of space to better serve the existing customers. The traditional financial system has only kind of scraped the surface in terms of who they served. They served the more formal and more well-off people around the region. And in Africa, we have seen this something that is fairly unique. There is a little bit of also in Central America, in a couple of countries in South America, but it's mostly around mobile money. So there has been kind of this duo of providers, the telcos on the mobile money side and the banking system taking care of the high end of customers. But there is a huge opportunity both to bring new people on board and also to provide more and better services to the people that has already been included or semi-included into the financial system. So, as I said, we see digital services, digital products and services being delivered in a new modern way as a critical requirement, both to scale, to reach the scale that allows for survival in the financial ecosystem, but also for capturing those opportunities. And that doesn't mean that you need to be huge, and this is a business where there are only going to be 3 big banks per market. That is not the case almost anywhere in the world, and it's not the case even in the most developed markets. So we don't see that as the future. What we see is a lot of players being increasingly better at taking care of their customers better and more deeply. So there is a lot of space for niche players that or smaller players that take care of customers, understand them, and provide the service these customers need. And in Africa, the financial ecosystem has not been standing still. They have been making progress, and the whole ecosystem is moving ahead from the large institutions investing more and more in technology every time to a lot of startups that are offering newer, better, different, more niche, more scalable services. We have seen several interesting news in the press in the last few months around huge investment rounds or acquisitions that have been made, and we don't see that trend stopping anytime soon. But just to be fair, it depends a lot on how this crisis got you in terms of how much you are going to be able to emerge a winner from this crisis, or your institution is going to suffer on the recovery. The region has done several interesting things through the financial ecosystem to help through the crisis, from routing government programs to trying to make progress on one of the most underserved segments in the region, and actually even around the world in terms of financial services, which are small and medium enterprises. We absolutely see that small and medium enterprises are going to be absolutely fundamental on the recovery. So the better prepared each financial institution is to take care of those customers, to understand them, to be able to serve them in appropriate ways. There is not the same service you need to provide to a large enterprise with a huge treasury team and 20 people in administration versus a small corner pharmacy that has 3 employees and the owner does everything, right? So there is a lot of intelligence and technology to be applied into servicing that segment. And but as I said, how you emerge from this is going to depend a lot on where you're standing in terms of digital services when this crisis hit, and also what can you do and what you do through the pandemic to emerge on the other side. And that is kind of the institutional side, what the ecosystem has been doing and what are they thinking about. The issue here is, at the end of the day, the customers pay everybody's bills, right? So what do they want? As you can see here, they want, in terms of preferences, they want access, they want the ability to get into the formal system, but also they want to do it in a quick and efficient way. And obviously they want to do it more and more digitally. They, as you can see here, is they want to improve websites, and that is kind of a very interesting way of saying it, because that is even a step before of the digital apps that are so prevalent these days. So they are asking both for the very basic financial services to be done more available and more efficient, and also to improve the way you take care of them digitally. And then they are requesting several product-specific things, right? They don't want, or they want reduced minimum payments on credit cards. They want no late fees on credit cards or low payments. They want the ability to skip the payments for a month. All of those things are very product specific, right? As a financial institution, you define your product, you put a price to it, and obviously the minimum payment is one side of the question of how much that product is priced and how profitable it is for the institution. But all of these things, in terms of which are very specific product features, could be done cheaper and better if you have the right digital tools in place to implement this. There is one thing to provide the ability to skip a month in terms of payments if that is an online, either web or mobile form that people fill, and there is an automatic process on the back end that immediately approves, and the customer is given an answer. And it's a very different product feature if that includes going to a branch, doing a wet signature, and waiting 48 hours for an answer, right? It's extremely different in terms of, it's the same feature, but it's very, very different, both in terms of cost for the institution and also in terms of satisfaction and loyalty for the customer. So having those services in place is absolutely critical. Also, the customers are saying, and typically they are voting with their feet and with their phones, in terms of how do they want to be served, right? Is what we see here is in every market, they want more online banking, more mobile banking. There is a mixed thing here between mobile payments, some going up, some going down. That obviously depends on current penetration in each market, but I would say in general it is neutral to up. And they definitely want less of going to a branch or calling on the phone. And when we think about digital services, one of the things we always say is none of these channels are mutually exclusive. It's not a question of you are only going to do mobile, or you are only going to do online, or you are going to do only phone or branch. The thing here is, how do you put together your service offering so everything that is easy, fast, is done as digitally as possible, and you free up your people, for example, on the branch or on the phone, to have meaningful conversations with customers where they need somebody to chat with. They don't need somebody to chat with for 95% of the transactions they typically do, or the questions they call a phone advisor to get answered. So if you free up that 95% of the traffic from the branch and from the phone, you move it to digital, and then you free up your humans, as we say, to have those meaningful conversations, that is going to be a much better service offering in general. The composition of your service offering is going to be much better than if you are heavily branch-based or phone-based, or you are asking people to come. There is, in some old-style institutions, there is this thing about the more I see the customer, the better. That maybe was true in the past. It's definitely not true today, and it's less true every day, as you can see in the slide. So making that cultural switch inside the institution is critical. And also understanding that the fact that you are interacting more with the person online, it doesn't mean you are seeing the person less. You most likely are seeing the person more often, and you have that service opportunity, that moment of truth opportunity of servicing the customer more times a month. The issue is doing it well, and it doesn't change. You can do it as well digitally as in person or on the phone. So that brings us to the how, right? It's okay. That is what institutions are doing, what the customers are asking for. So what can we do about it, right? And here, I would say mostly on the developed markets, but to some degree in the emerging markets, there has been, at the beginning of this fintech emergence in the last few years, there has been this thing about competition, right? Is the fintechs come to take the space of the banks, and banks have reacted, some depending on the market, more aggressively or not, stuff like that. Is we see it as we are all part of an ecosystem, and there is infinite opportunity still to increase the size of the overall ecosystem for everybody. So we see it more as a collaboration play than a competition play between traditional incumbents in the financial ecosystem and newer players. So what can that collaboration with newer players and more technology-based players can bring to the traditional institutions and to the overall ecosystem? They can bring new products and services, stuff that eventually is not economical to do in person or paper-based that you can absolutely do digitally. Speed, efficiency, and security, that is absolutely critical. Reaching more people, more demand, both in terms of new customers and newer product to existing customers, and providing a better user experience is one of the things we constantly say to our customers, to our financial institution customers, is people are not going to compare you, for example, your app, your mobile banking, they are not going to compare it with the other bank next door. They are not going to open 20 accounts to compare which has the better digital services. And they are going to compare it to the best apps they use on the phone, right? In terms of design, of usability, of speed, of availability, and stuff like that. So user experience is something that is absolutely critical. In the same way, you try hard to make your branches look as nice and welcoming as possible, and for customers to have a better experience there. The same happens on digital services. And lastly is the regulators are modernizing themselves, and as we have seen all around the world, is they are becoming more understanding of, for example, the cloud. 10 years ago, typically both financial institutions and the regulators were a little bit reticent to look at the cloud as a solution. If you look today, there is almost no regulator in the world that doesn't accept cloud as typically the best way to host your systems. Is we obviously, everybody individually does the best they can do to provide great services in terms of technology, but at the end of the day, there is a scalability advantage for the huge players in the industry like Microsoft, Amazon, stuff like, and Google to provide those cloud services. So solutions that tend to be hosted on the cloud show better security, even easier access to regulators when they need it. They have all the certifications they need and stuff like that. So we have seen a huge change around the world in terms of regulation that allows for that collaboration between fintechs and traditional institutions. Having said all of this in terms of where fintech and bank collaboration can help, I would argue that there is one thing where traditional institutions can learn from the newer entrants, and where they have to make the biggest shift, which is culture. None of this can happen if there is no cultural change inside traditional institutions. Moving a form that has traditionally been on paper to the web, if that form that the customer fills on the web ends up being printed, put on a file, move through branch to regional office to central office, and takes a week for the customer to receive an answer, then you have just digitized one form. You haven't changed your culture to allow for digital servicing of your customers. So I always start by saying the first thing you need to do is look at the executive commitment at the institution for cultural change in terms of providing better digital services for their customers, and then work on the tools, right, on the how. But it's really, really critical to start by that. How do we think about the services we offer to customers? We try to bucketize this into these three areas, right? Is you have your existing customers and you want to sell more. In many instances, the medium to smaller institutions may or may not be the principal financial vendor of their customers. So increasing your share of wallet in your existing customers, being more important to your customers, is absolutely critical. And for that, you need to be able to connect with them, connect in a meaningful way, connect in a way that is targeted, that is relevant, and as I said, that is really digital in the sense of, if I push this, you offer me with a button to renew my loan, then there cannot be 48 hours between I push the button and then I get an answer, for example, or stuff like that, right? So increasing your share of wallet in your existing customers, it's important to increase loyalty, to make sure they stay with you for the long run. Then bringing more customers on board, right? That is what most institutions are always pursuing. And the good news about this is, in emerging markets and in Africa in particular, there is a lot of space to find new customers. And that means that there is this is not as much a competitive issue as a creative issue in terms of how do we reach more customers, new customers that that want to be included in the formal ecosystem. So that is one. And in that one, the good news about digital is everybody looks the same. There is an old saying about the internet, which is everybody looks the same on the internet, in the sense of, even if you are a 10,000 person financial institution, or a 100-person financial institution, or a 50-person financial institution, if you have the right digital services, you can compete on equal terms with the guy next door. You are not going to have the same TV advertising budget. You are not going to have the same branch footprint. But for the people you really want to serve, the people that you know because they are in your region, in your city, in your neighborhood, or in the profession you serve as a cooperative or whatever, is you are going to be the better equipped to offer services to those people. And then you need to be able to service both existing and new customers more efficiently. As we saw, is return on equity in emerging markets at some point will tend to go or to converge to more mature market levels, and efficiency becomes really, really important. And I think in that there is the key to actually is what's going to separate the winners from the losers, is going to be both on how well equipped are you to serve those customers profitably. I mentioned before, one of the things where customers, if you remember from the slide on what customers wanted, they talk about, I want to skip a payment, I want to no late fees and stuff like that. And obviously the first fear is, okay, it means they are not going to pay the loan, right? Well, what we are seeing consistently around the world and around digital services is, the more digitally you connect, the better your chances are to be first on that payment queue from the customer. We all know it's rare the customer that only owes a minimum payment or a loan payment to one institution or to one provider. And collections is in many instances a game of who is first on that queue. So getting what we are seeing here from this study is, the more digital you connect, the better your chances of collecting your payment, either partially or fully, right? And the more old school you connect, the less chances. And that's basically a question of a reflection on how, as humans, we are getting used to connect to everything, to each other, to our families, at work, in this event, or with our financial services. So as I said, this provides a way, for example, of online provides you a way of doing smaller intensity but more periodic touch points with the customer. For example, there is an example there in the phone of one notification, right? So before having to resort to a very intrusive phone call, you could have several instances of touching that customer digitally in ways that keep you, give you better chances of being at the top of that payment queue from your customers. We try to work to embody everything I just said in terms of what needs to be done in terms of digital services. We focus on being flexible and customizable, to be very transparent in pricing, and to make sure you have unbeatable time to market, not only the first time you go into production, but only in every new need you have. And all of that with maximum security. That is, those are things we believe in, but those should be basically the set of conditions you put to any provider of digital anything you buy. And even as a consumer, these are the things you should be looking at in the providers of any digital things you consume. You need to ask bankingly to fulfill these 6 points, but you also need to ask Netflix to fulfill these 6 points. And that is something that we think it's very important to have in mind when you are looking at a digital solution. And once again, that is going to depend a lot on combining that agility, that cultural change, that change in mindset inside the institution and the technology to be able to achieve that scale and that efficiency and that market penetration almost every institution is constantly looking for. As I said, it starts with culture and then it follows with technology. It's never the other way around. But once you are ready to have that conversation, we would definitely like to talk to you and help you achieve those goals. So with that, thank you very much for having me. It's a pleasure for us to keep working in the region. We are building our teams in several countries right now. We have people in many countries already. All of them are listening on the other side of this presentation, and you can find them inside the website of the event, and you can contact them. So reach out, let's have the conversation. I'm always excited to talk about financial inclusion, financial services, and how do we achieve those goals through digital. Thank you very much. And Gustav, it's back to you.